Hello and welcome to our weekly global market outlook. I'm Tolga. Over the past week, US equities continued their slide, pushing the S&P 500 firmly into correction territory for the first time in over a year. Markets grappled with signs of moderating inflation, fresh tariff announcement, and renewed geopolitical concerns. In the coming week, investors will focus on several major central bank decisions, especially the Federal Reserve meeting, and on key economic data that may set the tone for the next phase in global markets. Last week began with the S&P 500 joining the Nasdaq in correction territory, down more than 10% from its record high. That milestone came just 3 weeks after the index hit a new peak, underscoring the speed and severity of this latest pullback. Despite a 2.1% rebound on Friday, the S&P 500 finished the week with a 2.2% decline, its fourth consecutive weekly loss, while the small-cap Russell 2000 slid deeper toward bear market levels, off roughly 16% from November's high. Gold was a standout performer, setting a new record price above $3,000 an ounce on Friday, supported by rising safe haven demand amid ongoing economic uncertainty. Silver also climbed above $34 an ounce, reaching a 5-month high. Meanwhile, bond markets found support in the US as yields eased lower, reflecting both the cooler inflation data and increased demand for safer assets. Notably, the consumer price index for February came in lower than expected, with core inflation dropping to an annualized 3.1% from 3.3% in January. While this alleviated some inflation concerns, consumer sentiment tumbled to its weakest level in over 2 years, likely weighing down by tariff issues, emerging recession fears, and a heightened risk of mood. On the geopolitical front, tensions flared as the US imposed and then partially rolled back tariffs on several trading partners, triggering retaliatory measures. Uncertainty also rose toward the weekend, with news of US military action in Yemen and extended European sanctions related to Russia. These developments added another layer of complexity to an already challenging trading environment. Looking forward, here's a day-by-day snapshot of what to watch this week and how it might affect the markets. Monday, the US Census Bureau reports retail sales data, followed by NAHB Housing Market Index. Retail spending could reveal how resilient the consumer remains as inflation moderates but tariffs create new cost pressures. Tuesday, investors get fresh updates on housing starts and building permits, along with industrial production and capacity utilization. These releases will offer clues about construction activity and broader factory output, both sensitive to rising input costs tied to tariffs. Wednesday, the Federal Reserve concludes its 2-day policy meeting, with Chair Jerome Powell's press conference likely to dominate market attention. The Fed is widely expected to keep its policy rate unchanged, but updated forecasts and Powell's comments on inflation, economic risks, and the timing of any future rate cuts will be key market catalysts. Meanwhile, the Bank of Japan also meets this week, although no major changes are anticipated given recent wage and price developments. Thursday, a host of reports include the Conference Board's leading economic index, the latest existing home sales data, and weekly unemployment claims. In addition, the Bank of England will announce its rate decision on Thursday. Markets largely expect a hold at 4.5%, but any signals on future policy direction, given ongoing stagflation concerns, could influence the British pound and UK government bond yields. Friday, no major US reports are scheduled, though the broader narrative will continue to digest the Fed's policy outlook. Internationally, investors will monitor Japanese inflation results, New Zealand's Q4 GDP, and the Swiss National Bank's policy decision for any signs of policy shifts or broader macro pressure. Global markets remain on edge after steep equity declines, moderating inflation data, and renewed geopolitical tensions. All eyes are on the US Federal Reserve this week. Any unexpected policy hints from Chair Powell could spark another round of volatility. At the same time, ongoing tariffs and shifting global trade policies present continued headwinds for both consumers and corporates. Thank you for watching our weekly global market outlook. If you found this update useful, please give it a thumbs up, share it with colleagues, and subscribe so you will never miss our next report. Let us know in the comments which data release or central bank decision you think will matter most. I'm Tolga, and I will see you again next week.